Welcome to the Morning Download Podcast, your daily guide to personal finance, economics, and market insights, all in just 8 minutes. Get ready to empower yourself with the knowledge you need to make smarter money decisions. In today's episode, we'll cover U.S. fashion, credit card debt, inflation levels, Tapestry's acquisition of Michael Kors, gas prices, Manhattan's cost of living, positive growth from Disney and Alibaba, the prediction of the SEC approval for Bitcoin ETFs, tips to reduce credit card debt, and the importance of willpower in investing. Good morning, investors. First, let's start with the U.S.'s emergence as a potential powerhouse in the fashion industry. With recent developments and notable American designers making waves, Paris should be prepared for some healthy competition. Look out LVMH. Next, we will discuss the upcoming crypto rally. As digital currencies gain further traction, experts predict a surge in crypto prices. It is important for investors to be aware of this trend and understand how it may impact their portfolios. Finally, today's download will touch upon credit card debt, a topic of concern for many individuals. We will delve into the intricacies of credit card debt management, providing insights and tips on how to navigate this financial challenge. Stay tuned for more updates and analysis on personal finance, economics, and the ever-evolving markets. As always, we strive to deliver relevant and valuable information to empower your financial decisions. Economy. The Consumer Price Index in July saw a 3.2% increase compared to the same period last year, slightly below expectations, but up 0.2% from the previous month. This suggests that inflation is stabilizing, although it still falls short of the Federal Reserve's target of 2%. Industry experts anticipate that the rising prices of oil will pose challenges for the Fed in meeting its target, potentially leading to a prolonged period of higher interest rates. One significant contributing factor to the inflation figures was the increase in shelter costs, which rose by 4.4% in July. News Tapestry's acquisition of Michael Kors. The fashion industry is set to witness a major transformation with the announcement that Tapestry, the parent company of Coach, will acquire Michael Kors and Capri Holdings, the parent company of Jimmy Choo. This deal, valued at $8.5 billion, will consolidate some of fashion's biggest names under one entity, including Coach, Versace, Kate Spade, Jimmy Choo, Michael Kors, and Stuart Weitzman. The resulting American fashion giant could pose a challenge to established European brands like LVMH. Tapestry CEO Joanne Crevoiserat highlighted the acquisition's potential to expand their presence in the luxury market and attract higher-end consumer segments. Quick hits. Gas prices are once again on the rise. Consumers are facing difficulties in meeting loan payments. Manhattan has reached new levels of expense. Stocks have experienced a positive day as they opened higher on Thursday, driven by encouraging inflation numbers. The major indexes have all risen, and notable companies such as Alibaba and Disney have shown growth, with Alibaba reporting a 4.60% increase and Disney with a 4.88% increase. This positive development comes at a much-needed time for Disney, following their disappointing earnings performance. As the earnings season draws to a close, it has been largely positive thus far, with nearly 80% of companies meeting expectations. This trend, coupled with the recent months' upward trajectory in stocks, has created an overall positive sentiment in the market. Some major movers in the market today include Capri Holdings, which experienced a substantial jump of 56.27% following a positive report. Additionally, Dillard's Inc. saw a significant increase of 11.10% after reporting earnings. Conversely, Tapestry experienced a fall of -12.71% after announcing an $8.5 billion deal, while Krispy Kreme, Inc. fell by -11.15% due to poor revenue performance. Overall, the stock market has seen a green day with encouraging inflation numbers and positive growth in key companies. The currently concluding earnings season has largely met expectations, contributing to the overall positive sentiment in the market. Matrixport, a leading crypto platform, has made a prediction regarding the approval of spot Bitcoin ETFs by the SEC. According to their recent report, the SEC is likely to approve several spot Bitcoin ETFs in rapid succession. This anticipated approval has the potential to trigger a significant boom in the crypto industry. In their report, Matrixport highlighted that the ETF providers would allocate considerable funds towards marketing expenses in order to attract both retail and institutional capital. Marcus Thielen, head of research at Matrixport, emphasized the potential for these ETF providers to generate substantial revenue. For instance, the report mentioned the Grayscale Bitcoin Trust, which at its peak managed over $43.5 billion in assets and earned $870 million in fees. Furthermore, the report suggested that a physical Bitcoin ETF would likely carry a management fee ranging from 0.7% to 1%. Even with this fee, the report projected an annual revenue of around $200 million for the ETF providers, considering the front-loading of marketing expenses. Next week, the SEC is expected to provide a response to various ETF-related filings, including the lawsuit filing by Grayscale's GBTC. This response will be eagerly awaited by market participants and could have significant implications for the future of Bitcoin ETFs. Overall, Matrixport's report underscores the potential for a rally in the crypto market following the approval of spot Bitcoin ETFs by the SEC. The predicted capital influx and revenue opportunities for ETF providers further highlight the anticipated positive impact on the industry. Personal finance is a crucial aspect of everyone's life, and it's important to manage it effectively to avoid falling into debt. The current situation in the United States is concerning, with credit card debt reaching a new high. There are approximately 183 million Americans with credit cards, and this heavy reliance on credit is pushing people into debt. While credit cards do offer rewards, it is essential to pay them off in full every month, which unfortunately most people fail to do. The rising inflation forces consumers to consider options like credit cards, leading to an increase in the average consumer credit card balance to $5,947, the highest in the past decade. If you find it challenging to control your spending or get rid of credit card debt, here are some tips to consider. First, create a debt payment strategy that suits your situation. Two popular options are the snowball method and the debt avalanche method. Additionally, paying more than the minimum payment, if possible, can help eliminate debt faster. Automating payments not only helps avoid late fees, but also streamlines the process. Debt consolidation may be another avenue to explore, as it combines multiple payments into a single account for easier management. However, it is crucial to carefully assess the available options and consider affordable personal loans or 0% balance transfer credit cards. Plus, it's important to make sure debt consolidators have your best interest in mind. Contacting your creditors and working out a plan that suits your circumstances can provide some relief. Be aware of hardship programs that creditors might offer, especially in situations like illness or unemployment. Exploring debt relief plans such as bankruptcy, debt settlement, or debt management may also present new opportunities. Making lifestyle changes is equally important. Consider replacing credit cards with debit cards, some of which offer attractive features like earning money on deposits. Creating and sticking to a budget might be challenging at first, but it will eventually become a habit. Lastly, having an emergency fund in place will ensure you have a safety net for unforeseen circumstances. Take control of your personal finance, reduce credit card debt, and make financial well-being a priority. Today's investing quote comes from the renowned investor, Ben Graham. He wisely stated, "Even the intelligent investor is going to need considerable willpower to keep from following the crowd." This powerful observation highlights the crucial role willpower plays in successful investing. In our dynamic and constantly evolving financial markets, it is all too easy to get caught up in the frenzy of popular investment trends. The fear of missing out, combined with the desire to replicate the success of others, can lead even the most intelligent investors astray. However, Graham reminds us that true investment success lies in the ability to resist the urge to follow the crowd blindly. Maintaining a disciplined approach to investing requires a strong sense of willpower. It entails a willingness to think independently and make decisions based on thorough research and analysis rather than succumbing to popular opinion. It means recognizing that the crowd is often driven by emotions and short-term market fluctuations, which can be detrimental to long-term investment goals. To be a successful investor, one must have the courage to go against the herd mentality when necessary. It is essential to stay focused on your own investment strategy, even when faced with intense pressure to conform. By doing so, you can avoid herd-driven investment bubbles and make sound, rational decisions that align with your own objectives and risk tolerance. In conclusion, Ben Graham's quote serves as a valuable reminder for investors to maintain willpower and resist the temptation to blindly follow the crowd. By staying true to your investment principles and making independent, well-informed decisions, you increase your chances of achieving long-term success in the unpredictable world of investing. In today's episode, we covered a wide range of topics, including positive stock market trends, the acquisition of Michael Kors by Tapestry, positive growth in the fashion industry, the potential approval of spot Bitcoin ETFs, the concerning levels of credit card debt, and the importance of willpower in investing smartly. Thanks for listening to today's episode. I'll see you guys at the next one, and don't forget to subscribe.